Hello, my name is Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your daily technical analysis of foreign exchange markets. Euro dollar. A sixth bullish white soldier yesterday and a first close over all the moving averages for about 3 weeks. But more importantly, it is a first close over the bright red highlighted upper time, currently at 107.99 of the early March to early June bearish Andrews pitchfork. Topside resistance is now at the 50% Fibonacci line for 2023 at 108.64, whilst below we have the slowly rising long moving average, currently 107.98, and the flatlining medium moving average, currently 107.93. I've also drawn a shallower bearish shift pitchfork with the same early March to early June move in the hope that perhaps this might be a better fit for the very recent action. We shall see on that. So far today, a small but clear move higher away from the bright red upper time. Cable, aka sterling against the US dollar. The result is in. And yesterday's action saw a sixth bullish white soldier, though the range was limited. Prices are nevertheless still over the combination of the 50% Fibonacci line of the June 2016 to September 2022 move and the September 2020 low, both at 126.99. And also importantly, the bright red highlighted breached July 2021 to date downtrend, currently at 127.23. However, we did not reach up to this week's high around the lesser Fibonacci line at 127.72, though it was a high close. The market is now sitting over a wider congestion zone between about 125.81 to 126.74, possibly as far as 126.99, and consisting of the slowly rising long moving average, currently 125.81, the 50% Fibonacci line, the July to October 2023 move at 125.90, the green highlighted and, well, not highlighted anymore, but the slowly rising short medium moving average, currently at 126.57, the flatlining medium moving average, that's currently at 126.47, congestion at 126.72, and a 50% Fibonacci line of the June 2016 to September 22 move, plus the September 2020 low. So it's quite a lot there actually. I might soon include the bright red breached July 2021 to date downtrend into that series. Further above, we have significant congestion at the November 2020 low at 128.52. So far today, just a small move higher right now, up to that lesser Fibonacci line at 127.72. Euro sterling. A bullish double yesterday as prices dipped down to find support at the lower uptrend of the June-based dark blue highlighted rising wedge pattern, currently 84.63 to 85.02, with prices closing back up over the April 2021 low at 84.70. We have further congestion higher up from the late May to early June congestion that had previously made a bearish halfway hesitation between roughly 85 even to 85.25. Overall, the last 2 to 3 weeks have been a reactionary move back up from the market reaching its potential down at 84.30 from the May to June based bearish halfway hesitation. So far today, a lower open below the April 2021 low, but recovering higher, though not too far. It is over it, but not too far and none too aggressively either. US dollar against the Japanese yen. An immediate countering bearish opening black Marubozu and bearish engulfing pattern yesterday, after the previous session's combined key reversal up and bullish engulfing pattern. The top side was capped again by the dark blue highlighted middle time, currently at 162.34, the recent March to May bullish shift pitchfork. Above that is the purple highlighted middle time, currently at 162.64 of the older February 2022 to January 2023 bullish shift pitchfork, plus the December 1986 high at 163.36. For information, the purple middle tine had capped the market back in late April. Now below we have congestion band made up from the April 1990 high at 160.34, the late April this year high at 160.04, and the May 1990 high at 159.61. Just for guidance, we have a lot of gaps up here from back between April 1990 and December 1986 high at 163.36, which we are filling in at the moment. Now so far today, a follow-on lower, approaching congestion below between 160.34 to 159.61. US dollar versus CNH, the offshore Chinese yuan. A second bearish black crow and a follow-on lower to the previous session's very interesting combined key reversal down and bearish engulfing pattern. The market broke down and closed below the dark blue highlighted uptrend of the June-based bull channel, which is currently 729.78 to 733.37. Down below we have the previously mentioned congestion zone between 724 to 727, within which sits the rising short medium moving average, currently 725.93, the rising medium moving average, currently 724.52, and the upper trendline extension to the January to April ascending triangle, currently at 724.20. Now so far today, a further test lower as prices started approaching that 724 to 727 congestion area. The move down below the dark blue channel, dark blue bull channel I should say, sets up a primary target X down in the 725.25 zone, with a secondary harder to reach target X1 down in the 723.25 zone. US dollar against the Mexican peso. A third bearish black crow and a continuing follow-on lower to the recent significant key reversal down. Prices closed significantly for a second consecutive time below the dark blue highlighted middle tine, currently at 1834.34 of the early April to mid-May bullish Andrews pitchfork. Above we have the capping action, at least on a closing basis, of the February 2020 low at 1851.71, which aided in the capping action we saw back in early June. I'm now considering for a third time if the whole action in June from the peak at the start of the month at 1898.60, whether it might be a bearish halfway hesitation in construction. We'll have to wait and see on this. However, in the meantime, I'd like to put once more the following idea in front of you. And that's of the longer term possibility of the action from 2022 to date as a potentially a huge double bottom pattern idea. We are now, after the rise during May, June and even now in July, despite the recent falls, relatively close to the neckline area in the big scheme of things of around the February 2020 low at 1851.71. As this is something I saw on my monthly charts, I would appreciate the very least monthly closes, consecutive monthly closes over this level to confirm such a long-term potential move higher. Prices came close to doing this in June but failed to make that significant high close. Thus it will be interesting to see what the month of July may bring. Now so far today, a slightly higher open, but the market has turned lower towards yesterday's low. Below we have the lesser Fibonacci line at 1794.37 with the nearby April high at 1699.90, but below that is the bright red highlighted neckline extension currently at 1780.44 of the January to May 2021 head and shoulders top. Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.